live where you want to live, but invest where the numbers make sense. Could be different for everybody because different markets produce different results. Figuring out what you want investing to do for you and then matching that with the market is super important versus just buying in your own backyard.
Hey, Rent-A-Retires, it's Adam Schroeder here with another episode, and I am joined today by a generic real estate entrepreneur. He is the host of the Everyday Real Estate Investor podcast, and that is Ben Nelson. Ben, thanks for joining me today.
Yeah, thanks for having me here. Appreciate it. Looking forward to it.
Yeah, absolutely. So we like to start off and tell people how people began in real estate. So tell me a little bit about what got you interested in real estate and what was the first deal you did?
Yeah, so I'd say what got me started in real estate and kind of thinking about it is what a lot of people's story is, right? There's a purple book that a lot of people talk about.
The Purple Bible.
Yep. The Rich Dad, Poor Dad, and kind of just that mindset change of, being an entrepreneur and assets versus liabilities and all of that stuff. And so that kind of sent me down that path. And then my first investment was, I always say it's about as small as you could do for your first deal. And I actually did a manufactured home in a manufactured home community that I flipped. And I bought that home for $2,000 and I put, I think 14 or 15 into it. And I turned around and sold it for about 40. And from there, that's maybe not the biggest deal, but for me, that was like, okay, this makes sense, and I can take this and go forward from there. So, I don't know if you can get much smaller than $2,000 manufactured home for your first deal, but that was mine.
So two or three questions off of that is, sure. Number one, what made you feel comfortable, or even at least not uncomfortable enough to not do it, to dive into a manufactured home and then to actually decide I'm going to do rehab on this, even though I'm assuming at that point in time you'd never rehabbed a manufactured home before. So how did you find it? And then how did you decide to move forward with it?
Good question. So how I found it is how I found a lot of those deals. And at the time I worked for a manufactured home dealer. I was doing sales for them. And so, a lot of times I'll show up and they're calling me to help them sell their home, but really that's not the best solution for them. And that comes out just in conversations with them and just trying to really understand what their situation is and what they're trying to do. And sometimes people just are in a bad spot or they're just done and they just need to move on. That's really what they need. And they need some sort of, they need something firm that they know they can count on, and price is not as important to them. Is the guarantee that this is a done deal. I don't have to think about it anymore. So that's how that one happened. Was they called me to sell it. It came out she just needed to be done. And so I had sold enough of them that I knew what it was worth putting a little bit of money into it. And so I just said, look, I can't give you a lot, but I can give you this. So that's how it came about. And then as far as being comfortable with it, I don't think I was. I think it's funny because it's like, when you're first starting out, even though that's such a small deal and it's a very little risk, I think it's still an unknown when you're starting out. And anytime you step into an unknown, whether it's a small unknown or a big unknown, it's going to be a little bit scary. So you just kind of have to move forward. And what's the worst case scenario is it doesn't work out and I lose a little bit of money, and I learn from the mistakes and I do something different next time, and just being okay with that and moving forward, knowing that that's the worst case, but hoping for the best.
Yeah. So what was your next step from there? Did you just kind of stay in that space for a little bit and flipping those, or did you branch off into something else? Kind of what was your progression from there?
I did a bunch of those for a good amount of time, and actually it's funny because I don't even really focus on that anymore, and I still get calls, and so I'm doing another one and it's great because they know I'm going to turn around and sell it and make money, but I'm solving their problem. Their problem is a time frame and knowing they can have the cash within a certain amount of time. they want me to make money on it. They've told me that. So I don't really advertise that I do those anymore, but just people know me and they call me, and so I'll do it every once in a while. But yeah, I probably did 40 or 50 of those. Finally learned that usually it doesn't make a lot of sense to actually do the work. It actually makes more sense to get it at a price that makes sense and then just turn around and kind of wholesale it. So I've done more of that recently than actually doing the work. And then from there, it just, branched out into some small development and single family homes, mostly at this point, a couple partitions. I always do value add, whatever I do for the most part, unless I can, turn around and just make some money as is. And that makes more sense.
Yeah. So how did you know it was time to move on? Did you just get bored of it? Did you, start researching other things? How did you know it was time to switch away and go into a different avenue?
Yeah. A couple things, I think. I think just gaining that confidence that, hey, I can translate this to single family or multifamily, and it's all the same. It's just bigger. For the most part, it's the same. There's obviously some nuances that you have to learn when you step into a slightly different aspect of the business. But I think just the confidence. And then the other thing, honestly, I don't like selling stuff. And all of these were have been in, those manufactured homes are in communities where the land is leased. Most of them don't let you rent them out, or I don't all of them still, because I would have made a lot more sense. And so I got kind of tired of selling them and getting caught in this. I only have one exit strategy. It's a little nerve-wracking when you only have one way to get out of a deal. So it was a combination of those things, and just kind of wanting to scale up into bigger things, being able to do more with actual real estate.
Yeah. So you mentioned you focus now on value add, single family, multifamily. When you look at a property, obviously, we operate in the turnkey space, so it's a lot easier to say, okay, this is my price, this is what it's going to rent for, this, that, and the other. How do you go about evaluating property that you're looking to do a value add on?
Yeah, that's a good question. I think everyone has to have like kind of their own formula that they're working off of, and that works for them. Mine is tough in a competitive market because for the most part, I don't want to park my cash. I want to keep my cash working for me. So I like to find deals where I can, get into it, put in that value add, and I can turn around and refinance back that capital back out, so I can go and repeat that. So your classic BRRRR, right? You're buying, rehabbing, you're renting it out, and then you're recapitalizing. And so, that's really like, I know that's a super basic answer, but that's really what I'm looking at from like an overall numbers standpoint is, can I get my capital, or at least the majority of it, back out so I can go and repeat that process? I'm in acquisition phase. I'm not in park my cash phase. So
yeah, you should always be in acquisition mode, in my opinion, whenever it comes
very
to
true.
Yeah. So are you just investing around your local area, or are you branching out and going across multiple states or across the country, or what do you look at in that regard?
Yeah, currently mostly local. I definitely have markets that are intriguing to me that I will step into, just haven't quite yet. Some of the markets that you guys work in, for sure, are on the radar. I have done out-of-state investing, and I don't know if we want to go there or not, but years and years ago, I dabbled in some Midwest markets, and it did not go well, but I learned some pretty valuable lessons doing that. I actually swore I would never buy anything out of state again, but finally kind of came back around to like that it makes sense, right? Invest. The real estate guys always say, live where you want to live, but invest where the numbers make sense. Could be different for everybody because different markets produce different results. Figuring out what you want investing to do for you and then matching that with the market is super important versus just buying in your own backyard.
Yeah. So as you're considering moving into, different states, different markets, what are some of the things that you're looking at as you're vetting out the specific markets that you're considering, especially having had a bad initial venture into it. What are you doing differently this time to make sure that you don't repeat history?
Yeah, great question. So a couple things. I think from a success standpoint and where I fell short when I did it the first time is it really comes down to the team. I mean, the team is especially if you're going to be hands off, which you should be anyway, in my opinion. Even if you own local, I don't manage my own properties. I have a property manager. But even more so, I think when you're out of the area, you rely on your team to be honest, to be effective, to be giving you good information. And we weren't getting that. We were lined up with someone that just after we had gotten into a couple of investments, we figured out they were telling us what we needed to hear to move forward on a deal so that they could get a deal and get a rehab and all of these things. Not so we could get a good long-term investment. And so I think really vetting the team, having a good, reliable, honest team is the number one. And then as far as finding markets, there's so many markets that can get on fire in a short amount, for the short term. And you look at some of the Idaho mountain markets. The Idaho markets, they were on fire for a long time. And I mean, everything was really hot for a while. But those are some of the hardest hit markets right now because there weren't any drivers behind it really. People were just moving there to get, away from the West Coast.
The driver was leaving California
or whatever. What's that?
The driving factor was leaving California.
Right. Exactly. Yeah, exactly. And that by itself is not enough. And there's a lot of instances over history where you can look and see those short-lived, bursts in the market, and then you get left holding the bag if you're investing in those markets long term. And so looking for sustainable drivers, where are people moving to, and has that trend been continuing? Is it going to continue? Is there job growth? Are people, moving there for, jobs that are there? Why are they moving there? And if something changes, so like what happened in Idaho, a lot of people moved there from, like you mentioned, California, right? But they could keep their California jobs and their income there. And then because, COVID and a lot that became really, people were working remotely a lot more, kind of forced that issue. And then, if they lost that job and they couldn't replace it with a local job, then they have to move back, right? Or things like that, because those local jobs can't support that. So just long-term sustainability, real drivers, why are people moving there, and is it going to sustain itself?
Yeah. So as you're going around, you mentioned the value add stuff. What are some of the big things you're looking for as you're initially looking at a property where you say, these are the big drivers of value that are going to allow me to be able to pull out my cash later? Like, is there a specific, criteria that I'm assuming there is, otherwise you'd probably be broke by now. What's your criteria for saying, okay, I can add enough value because of this?
Yeah. Initially I think it's just really knowing your market and knowing what value is for the product that you're looking at. And then, I guess maybe this doesn't fully answer your question, but I'm always looking, for the most part, cosmetic aspects. I'm not, fixing a foundation generally. I'm not doing, but yeah, exactly. Because that adds risk and it adds time frame, and it's a lot harder to, there's a lot more pitfalls potentially. And so you have to be a lot more conservative with your numbers. And honestly, I'm just not really set up for that. So, but going in and doing some cosmetics and just knowing what the market is going to bear and what it's looking for. Now I've moved into doing more partitions and some small development and things like that. And so kind of my, general rule of thumb of if I'm going to look at something closer is, if you can do something to the property to get a couple extra lots out of it, and you can maybe rehab what's there and, get most of your investment back by just reselling that existing property, usually it works, even though there's going to be, site improvements and all that stuff with the city. Usually it's worth taking a closer look at. So that's kind of what I'm looking at now when I'm looking at smaller developments.
Okay. Now you mentioned started in manufactured homes and flipping those. Now you're doing value add stuff. You're hosting your real estate podcast where I'm sure you speak to people all across the space and learn about what they're doing. I mentioned to you, I wanted to talk about this beforehand. You had an episode come out not that long ago talking about the shiny object syndrome. It is incredibly easy to hear these stories. You mentioned hearing podcasts where people get 100 doors in 6 months, or they create a financing and do this, or they do that. How have you been able to stay in your lane and not venture off and take as many exit ramps as possible because you might get an extra 2, 3, 4% return if you go down that route?
Yeah, as an entrepreneur, I think that's the key question, because most entrepreneurs we're opportunists, right? And so if you see opportunity, it's hard to not go down that road. And so I think it just takes discipline in saying no, learning how to say no to opportunity, because you can only say yes to a certain number of things. That said, it's a process for a lot of people, right? You have to kiss a lot of frogs sometimes. As I say, you try different things. You don't know what's going to resonate with you necessarily in the space. There are so many different ways you can go about real estate investing, which is great, but it's that double-edged sword, right? There's so many ways I can do this. It's awesome, but it could also be very distracting. But yeah, you kind of have to try some different things, right? You have to, okay, do I like wholesaling? Well, that looks a lot different than doing the rehabs. That looks a lot different than doing some small development. That looks a lot different than syndication, right? They all have you're talking to different types of people. Your day-to-day looks different. And so there's a lot of things to consider, but I think it a lot of times takes trying different things to figure out what actually resonates with you and hone that in.
Were there any things you considered outside of, as you were transitioning away from your initial one, did you consider any other avenues outside of value add, and why did you end up at value add?
Yeah, I mean, for me, again, I think just being in acquisition mode and just wanting to recycle my capital, I'd say that was just a natural progression for me. But I will also say that leads directly into, well, I've only got so much capital for myself. So how do I go out and buy more? And so you just kind of start looking at things like syndication and raising capital and things like that to involve more investors that maybe they don't have the time or the expertise that I may have, but they have the capital that they want to put to work. And so I think that's another thing that I guess you could say I've considered, but I definitely will be doing and am doing. It's kind of that next step for me.
Now, you mentioned, doing syndications and getting other people's money for that. That is a whole different venture in and of itself from the value add. So how did you get enough confidence, or what point in time did you get enough confidence that even asking for other people to pitch in money towards capital, was an option for you, or was something you were comfortable doing?
Yeah, another great question. I think it just comes down to, looking at enough deals and making sure you really understand how to underwrite and find opportunity and having confidence in that. And then I think the other piece is, people get, and I'm not saying this is never me either. Sometimes it's a mindset thing. Well, I'm asking someone for their money. It's weird, right? Just people get weird about asking for money. But when you think about it, you're really providing a service to somebody, because if they have their money in the bank, now granted, it's better than it was, a couple of years ago when they were getting 0.5% or something like that in the bank, but they could be doing more with their money. They're probably looking for options to get a better return. And if you can provide that for them, you're actually offering them a service, and you're helping them rather than looking at it like, well, I need them to invest in my deal so my deal can get funded. That's true, but spinning that on on the other side and saying, well, I'm serving them. How can I serve them? I can give them this, I can match their funds to this deal, and they're going to get a great return on it. I think that kind of flips that switch on the mindset piece and kind of getting over that.
Yeah. So do you have a favorite metric that you look at whenever you're evaluating deals? Like if you had to make a deal based on one metric, and that was your first thing and you're throwing out everything that didn't meet that one metric, what would it be?
Gosh, again, so are we talking, flips or developments or what piece of it?
Let's start with the flips. Kind of what is the metric you're looking for there? Like the first thing off the bat.
Yeah, again, I think I hate to go back and kind of give you the same answer, but I think for me, for the most part, I want to keep stuff now. So I'm looking at, and I think the numbers are relatively the same now that I think about it. If I can buy something and put money into it and I'm in it for 70 to 75% of what it's worth after I'm done, that to me, there's multiple things I can do with that. I can sell it and make money. I can probably refinance it and at least cover the payment. And so I think going back to why a part of why I didn't want to continue doing so many manufactured home flips, having a couple different options for an exit is a big plus to me. And so I think that's kind of, where I'd like to land. So I can refinance, I can sell it. I have a few different options here that I can explore when I get to the end. So I usually have one that I am leaning towards getting into it, but having a backup option is always good.
Yeah, I always tell people to know their exit strategy before they go in, because that can completely change your what property you're going for if you have different exit strategy.
And that's a very good clarification, I guess, is that if you're like waffling, like I might keep it and I might sell it, there's you're going to set yourself up differently with your rehab and with some different things with setting up your funding up front, maybe even for if you're going to refinance it versus if you're going to sell it.
Now, you mentioned kind of when you became kind of what helped you become comfortable, asking for people's money. But what are some of the things you recommend to people if they're considering, giving someone money for their project? What are some of the questions they should be asking? And what are some of the signs that tell them, yes, I should, or start running for the hills?
Yeah, that's another really good question. So, track record is a big thing. So have they done what they're saying they're going to do? Have they done it before? Or is this their first go? You have a lot more risk if you're starting, putting your money in with a new syndicator. Now, they could be the main sponsor, but have a great partner that's very experienced too. So, there is that possibility if they have a really good team to make up for maybe some of that experience on their end. But that's the biggest thing is can they demonstrate a track record in the market and in the product that they're in and the strategy that they're trying to pitch as a deal to you. Those are kind of the main three.
All right. So in your opinion, where is the real estate market 1 year from now? I kind of feel like we've hit a point where interest rates are what they are. They've been this way for a long time. People keep saying high interest rates, but in reality, we've been here for, a year, so maybe even longer at this point in time. So it is what it is. But what do you see coming over the next year?
Okay, let me shake off the crystal ball here, right? Yeah. It's a hard question to answer, obviously, because we're looking toward the future and trying to predict something. But I will say, it drives me crazy when people point to one metric and they say, "Oh, this is the housing market's going to crash," and oftentimes it's prices have never been this high before, so they can't possibly go higher. Well, okay, people said that for every decade, forever, and here we are, and they're more than they were. So yeah, are there dips in the market here and there? Sure. We saw that the second half of last year in most markets, they dipped. And then, what happened this first half of this year? A lot of them came back. So very quick market cycle, the last 12 to 18 months. I always point to the fact that we are so short on supply as a country. We are, 5 million plus housing units short. We have higher interest rates. And so we have to work that out with affordability. But we have an inventory problem, and that's going to continue to push housing prices up. Is there a breaking point with interest rates? Of course. But they've somewhat stabilized ish in this, high 6s to 7. And I think that's what the market was holding off on the second half of last year. Number one, it moved so quickly. Right. And number two, it was super volatile. So now that we found kind of this is where we're going to be. I'm a broker as well here in the Portland metro area. And I'm as busy as I've been in a long time. So buyers are out there. I mean, the market is still continuing to move, and yeah, it's challenging with interest rates, but there's tools to deal with that. And they'll come down again at some point, not to 3%, but
probably.
Probably not. I guess you can never say for sure, but so yeah, I see. I mean, to answer your question, I guess I see, I think we're going to continue to see price appreciation in solid markets, not 20 to 25% year over year, but, back down to our kind of normal 4 to 5%.
Yeah. All right. So what market outside of Portland are you most excited to either invest in or consider investing in right now? I'd have to say a couple of the Florida markets for sure. I really like Jacksonville a lot. I think there's a lot of opportunity there. I really like Tampa. I'm trying to make sure that it's market driven and not emotional, but because I just, to be fair, I've only been there in the winter. So, that's my experience there, but I love it there. It's beautiful. And, but I think it's a strong market as well. And there's a lot happening, and a lot of those markets down there, I mean, there's people moving to Florida like crazy. And you can't, you got to look at those individual markets. You can't pick a state, right? Because every market's down to the neighborhood, but I really like a lot of those markets. I think Atlanta has a lot of opportunity also, and that's definitely not the only ones, but those are the ones I've been looking at. All right, fantastic. And so, we talked about your first deal, about kind of the win that happened there, but do you have any big wins or big losses that you want to, tell to the listeners?
Oh boy, the failure question, huh? I could. You gave me the option. To be fair, you said big wins or big losses. So we'll take
one or both.
Let's see. I'm going to pick the failure option just because I think you learn more from your failures. I've had a lot of good wins, but a few years ago, that's actually been longer than that now, maybe 5 or 6 years ago, I bought a commercial. It was a single family home, but it was zone commercial in a downtown here in the area. And I did not underwrite the deal. I didn't. It was outside of what I had normally done, and I bought it, and it was the worst mistake that I ever made. And we ended up. I sat on the property for about a year while it bled me, and ultimately we ended up selling it for probably a 25% loss from what we had paid for it. And my biggest things that I learned on that were. So the problem was number one, I hadn't done a deal in a while. And so I was just looking to do a deal. It's better to pass on a deal. it's a bad reason to do a deal. Like, I haven't done a deal in a while, I need to do a deal. And so you justify things that you shouldn't justify. So that was number one. Number two, I didn't really underwrite it very well myself. I just was kind of like, there's opportunity here, I'll figure it out, after the fact. Well, that's not the right order to do that in. But it was an easy deal. The seller financed it for me with a chunk down, which is the chunk that I lost. But it was easy, right? It was like, oh, sure, yeah, here, come up with this cash and I'll carry the note for you for a little bit while you figure out what you're going to do. And, I had no outside vetting of any kind. I had no lender vetting the deal for me. I had no outside investors questioning it. It was just a handshake with the seller saying, yeah, I'll finance it because you're giving me enough security that I don't really care if it works for you or not, because I've got enough security in it that if you do fail, I'm going to take the property back and resell it. So I'm covered. And I'm not saying that was their mindset, but, I just didn't spend the time and due diligence that I could have. And it was an easy deal when I wanted a deal. And sometimes that's not a good thing.
Absolutely. So the website is benjacobnelson.com. Want to give you a minute here to plug anything you'd like. Tell us a little bit about what you're doing and how people can, get in touch or get involved in the deals.
Awesome. Yeah, I appreciate that. Yeah. On my website, you can actually get a copy of the chapter. I wrote a chapter in the book, Success Habits of Super Achievers. You can get a copy of that there. Learn a little bit more about kind of my journey, which we've talked about a lot of it on the show. And then they can reach out to me through the website as well to, just connect. And I always love talking to investors. We're always looking at opportunities and, I'll just kind of throw on the syndication side of it that we're delving into. One of my, part of my heart behind that and behind the show actually is, a lot of those things are earmarked for people that already have a lot of money, right? They're accredited investors. We talked about before the show, there's a lot of podcasts out there talking about owning thousands of units. And, there's a lot of people that maybe not an accredited investor. Maybe they're, maybe they're just looking for their first property. And so kind of that's who we want to involve, and that's who we want to connect with is, people that are, maybe not quite there yet. They're not an accredited investor, but they want to get involved in some of these deals. Well, a lot of people don't let them. They only work with accredited investors. And so we don't want to exclude that. And then the show, again, just, hey, we're all everyday people out there doing stuff. That's kind of the heart behind that as well is you can be, involved in a lot of other things. You can be an everyday person. You don't have to be necessarily, this big real estate mogul. You can be, hey, go out and buy a property a year. Go buy a couple properties. You'll be better off for it. So.
Fantastic. Well, Ben, again, thanks for joining us. The website is benjacobnelson.com. That's benjacobnelson.com. If you want to get a hold of us, you know where to go. That's renttoretirement.com. We talked a bit today about some of the markets that Ben enjoys, but if you want to see what Zach is recommending, his top 20 markets to invest in 2023, you can email podcast@renttoretirement.com. We'll get that sent over to you. That's podcast@renttoretirement.com. Really appreciate the time you spent educating yourself today, and we'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.